Good morning, traders. I am Stephen Davis, Senior Market Strategist, RJO Futures. Friday morning, we're here to talk to you about the grain markets. Okay, the corn market. Yesterday, we had the WASDE report, once again reminding us that the global corn stocks are tightening in the world today. You don't see it in the markets here currently. Soybeans are going down. That's holding corn down. And we need to get these trade tariffs out of the way. And then I think there's a bullish story here in the grain markets, especially the feed grain, which is corn. The demand for corn is hitting on all cylinders. You had a good report yesterday with corn exports higher. So let's get these trade tariffs out of the way and move forward. You can see our first chart of corn beaten up in here, and I kind of think September corn could go up to 382. That's like 40 cents higher from here. We get some positive news on trade, and certainly it's important that it rains next week. If these rains come, corn's going to struggle with any rallies here. And any rallies are going to struggle in the corn and beans until these trade tariffs get out of the way. Nonetheless, a real good story on corn demand. It sets the stage now for more corn acres in 2019. Remember, USA does about 35% of the world corn grown in the world today. We could go to 50% next year. And how is corn market going to do that? Rally and buy these acres, because that's what the world wants. We know Brazil is going to go full bore on soybeans next year, and USA going to up their corn production. So we'll keep talking about that. Okay, the soybean market here. You can see the chart of soybean really beaten down. And Friday we had November beans were up 38.5 cents. That's the second biggest move in the last 2 years. That's one of the top 10 biggest moves in the last 6 years. Pay attention to this. There's going to be more of this as we move forward. Notice that high now. It's up around $9 in November beans. And again, rallies are going to have a hard time holding on here until we get these trade tariffs out of the way. And when soybeans go up 38, 40 cents, you want to see follow through. And there's none of that here happening. Just like corn yesterday stronger, today it's down a little bit. Weather looks a little non-threatening, so we'll keep talking about that. Okay, like I mentioned last week, the rest of the world picking up on their U.S. soy purchases. Egypt 3 times tripled their soybean imports from us from a year ago. We're seeing Thailand, Vietnam double their imports of U.S. soybean from a year ago. Egypt, I mentioned that already. Netherlands up. In other Asian countries are 20% higher on their U.S. soy import. Now China, 21% lower than a year ago. So certainly the Chinese are the 800-pound gorilla in the room for U.S. soybean demand. Now here's a headline I saw yesterday, and I'm laughing about this as I say this to you, that China comes out, Sino-Graham, one of their national agricultural, and says they do not need U.S. soybeans. When China says they don't need U.S. soybeans, you take the opposite of that. Right here, right now, they don't. But wait until they do need U.S. soybeans. That's a positive in the big picture here of things. And then lastly, the wheat market. We're trying to rally in wheat. We got some issues from other parts of the world, Russia and France in particular. So we'll kind of see if we don't see wheat set some leadership here. Everybody have an excellent weekend.